Welcome back, active investors. Right now, it is the perfect time to be active as you are an investor, as every active investor should be searching for great opportunities all the time. Actively seeking, actively learning. Welcome back, you guys. Today we have three undervalued Class A airlines to buy. Okay. Uh, Please take the time to subscribe and like the channel. Please do so right now. I would really appreciate it. Here we have Delta. Okay. Current price for Delta is 24.39. We have assets of 64 billion, liabilities of 49 billion, a shareholders equity of 15 billion, book value of $23, which means the stock is currently underpriced. We have PB ratio of 98, yearly revenue of 47.007 billion, and then we have a net profit of 4.7 billion, current ratio of 0.41, debt to equity ratio of 0.92, return on investment, you guys, 23.72%, which is unheard of. Cash on hand, we have 2.8 billion, and we have a long-term debt of 14.1 billion. Okay, you guys, so really quick, what I see here, I see a lot of long-term debt, and I've heard that we've just cut the dividend on this stock, and that um, just to stay afloat right now. Okay, the company is going through a hard time due to the coronavirus, but there are things that I like about this stock, which is the price. uh, and the other thing that I like about this stock is their uh, their current ratio and their debt to equity ratio, which is pretty much pretty well managed. Okay, uh, now we have here Southwest Airlines. Southwest Airlines, you guys, current price sitting at 36.47, assets of 25 billion. We have a liabilities of 16 billion and a shareholder equity of 9.8 billion. We have a book value of 19.95, which means the stock is not undervalued at the moment, but the stock is showing a lot of strength and resistance because the stock has a really good balance sheet. You guys, we have a PB ratio of 1.80, yearly revenue of 22 billion compared to Delta, which is 48 billion, and then we have a net profit of 2.3 billion compared to Delta, which was 4.8 billion. We have a current ratio of 0.67, debt to equity ratio of 0.30, which is what we want, and we have a return on investment of 22%. You guys, that's really cool. That's what we're looking for in stocks today. Okay, cash on hand, we have 4.0 billion, which is more than Delta, which they had 2.8 billion, and then we have a long-term debt of 2.9 compared to Delta's 14.8 billion. Okay, so here we have an outstanding balance sheet. Um, they have been facing a couple of headwinds in regards to the Boeing 737 and things like that. But of course, the corona and everything. But the stock is doing very well. The company is doing very well, and I think they'll make it through this crisis very well. Okay, here we have Alaskan Airlines, you guys. Alaskan Airlines has a current price of 31.61, assets of 12.9 billion, liabilities of 8.6 billion, shareholders equities of 4.3 billion, and a book value of 35. Okay, which means the stock is undervalued, you guys, and we have a PB ratio of 0.83, yearly revenue of 8.7 billion, net profit of 769 million, which is not too bad. Current ratio of 0.64. We have a debt to equity ratio of 0.62 and a return on investment of 15.24%, which is quite intriguing. We have cash on hand of 1.5 billion and a long-term debt of 2.7 billion with a number of employees of 24,000 employees. You guys, here is one company that also looks flawless in the balance sheet. You guys, they've been growing revenue and profit year to year. So they've been really steady with their cash flow, and that is something that we look for in value investing and when we invest in a company. Now, I think this company will make it out this recession since they don't have too much debt and they don't have as many employees to try to take care of. Um, it just depends on whether they get the bailout money or not, and that's really gonna affect the stock right now. But hey, still a good time to buy. It's still a good buy. Please take the time to like, subscribe, and share, you guys. I really, really appreciate it.